Hey y'all, welcome to Money Mondays with Modern Lady Vibes, where we're redefining what it means to be a lady in the 21st century by teaching independence, financial literacy, and business sense. Money Mondays is a weekly segment where I teach you everything you wish you learned in school about finances in simple, easy to understand concepts. If that sounds like something you'd be interested in, make sure to hit the notification bell and subscribe to the channel so that you get notified of uploaded videos every single Monday. In today's episode, we're talking about taxes, specifically taxes for self-employed people. When most people hear the term self-employed, they may think about someone who goes out and buys a storefront in order to sell goods or services. But what they may not be thinking about is the person who drives Uber or Lyft, or the friend who thrifts clothes at Goodwill and flips them on Poshmark, or even their aunt who started making and selling masks over the summer because she had a sewing machine and a closet full of material. All of these things can be considered as a business for the purposes of turning around a profit. And if that's the case, then each one of these people need to file a Schedule C and claim business expenses and income. According to the IRS, you have to fill out a Schedule C if you're going to report an income or loss from a business you operated or a profession you practiced as a sole proprietor. Activities qualify as a business if your primary purpose for engaging in the activity is for income or profit, and you are involved in the activity with continuity and regularity. So what does that mean exactly? Well, here's an example of what would be considered a business. Now, this is not an exhaustive list by any means, but it should give you a good idea of what would be considered a business according to the IRS. Pause the video now if you need to so that you can really read through the entire list here. What's important to note about what the IRS considers a business is that it's anything that you do to receive income or turn a profit, and it must be an activity that is done with continuity and regularity. Now, you may have participated in some of the activities listed in the previous list and still not have to fill out a Schedule C. So how do we determine what is not considered a business according to the IRS? Well, if your activity is sporadic, or it is not for profit, or it's a hobby, then you would not have to fill out a Schedule C. Some examples would be if you cleaned out your closet and sold some of your clothes or purses or accessories on Poshmark, but you sold them for less than you purchased them for. If you sell something on Poshmark or eBay, for example, and you sell it for less than the amount that you purchased it for, then obviously that is not for profit, and so it would not be considered a business activity. Additionally, if you decided to make masks this summer and you did sell them, but you only sold them to 5 friends or 10 of your family members, and it wasn't something that you were doing regularly or with continuity, again, that would not be considered a business for tax purposes. You do need to claim all income on your taxes, but it would not be done on a Schedule C. So make sure that you meet with a CPA or a tax advisor so that they can help you better understand where you should claim that income. Okay, so now that we have a pretty decent idea of who needs to file a Schedule C, let's get into the fun part of determining what type of expenses you can claim as a business deduction so that you can lower your taxable income. For many people who have jobs and receive W-2s, they may not be aware of the extensive amount of expenses that can be deducted from your taxes if you're operating a side hustle or activity that's considered a business according to the IRS. Here's the official Schedule C form for 2020. Here in Part 2, you'll see the list of expenses that you can claim as business deductions on your taxes. I'm going to go through this list in a little more detail so that you know what type of receipts to pull in order to be able to properly calculate your business expenses. Advertising expenses are related to anything that is involved in the promotion and selling of your products or services. This can include the purchase of online ads, brochures, business cards, flyers, or mailers. Here is a list that's a little more extensive that would include advertising expenses. Feel free to pause the video so that you can get a better look at what is included in advertising expenses. Car and truck expenses are any expenses related to using your vehicle for business purposes. Now, if you drive to and from your W-2 job, you cannot include that in your business deductions. That's considered commuting to work and it's completely separate. But let's say, for example, you produce a product and you have to buy materials from the store. You can claim the miles driven from your home to the store to buy materials and back as using that vehicle for business expenses. If you offer a service, maybe you do consulting work or lawn care or something of that nature, then you can claim the mileage from driving from where you are to the client's location and back. Those are the type of vehicle expenses that you can claim for your business. Here is a list of additional expenses you can deduct for your vehicle that is related to your business. Please note that for any parking and toll expenses, they can only be deducted if you incurred those expenses during business travel. There are two methods for calculating your vehicle expenses. There's the standard mileage method and the actual expenses method. Make sure that you get with your CPA or a tax advisor in order to determine which method is best for you. Commission and fees are for any expenses that you would pay to an individual or entity that does not qualify as an independent contractor. Here's a list of potential commission and fees that you may pay for your business. Contract labor is where you'll put down any payments that you make to contractors that worked for you during the year. Now, there's a few things that you really need to know when it comes to contract labor expenses. First, if you paid any one contractor more than $600 in the taxable year, you need to submit to them a 1099 miscellaneous form, and it needs to also be filed with the IRS by January 31st. There are numerous online programs that can help you to file a 1099 miscellaneous form, and a quick Google search will help you find those things. However, to be on the safe side, again, I recommend that you meet with a tax advisor or CPA so that they can help walk you through that process. But you better hurry because January 31st is coming up soon. The second thing you need to know is that even if you paid a contractor less than $600 for the year, you're still going to claim those expenses on your taxes. The only difference is that you don't have to file a 1099 miscellaneous form with the IRS or send one to that contractor. Here's a list of possible contract labor that you would include in this section. The IRS defines depletion as the using up of natural resources by mining, quarrying, drilling, or felling. It's highly unlikely that most of you need to worry about this section, so I'm going to skip over it. But if you think it applies to you, again, make sure that you advise a tax advisor or CPA. Depreciation is related to the purchase of assets for your business. So when you buy a car, cell phone, computer, furniture, tools, or office supplies, for example, those types of things have a diminishing value over time, meaning that you're likely only going to be able to sell it for less than the amount that you purchased it for if you choose to sell it down the road. The IRS allows you to take this diminishing expense, divide it up over the years that you'll be using that asset, and claim it as a depreciation expense. I'm going to skip the employee benefits program line because this video is catered to those who are individuals running businesses or sole proprietors, and so they wouldn't have any employees in their business. Insurance expenses are for any type of insurance that you pay for the protection of your business that is not health insurance. Additionally, if you do business outside of your home and you pay homeowners insurance, that would not go in this section either because there's another area that is designated for that. Here's a list of possible insurance that you may pay for that would be able to be deducted here in this section. I bet you didn't realize that the interest that you pay on business loans or even credit card payments can be deducted as expenses. Here's a list of the type of interest that you can deduct. Note that this is just one of many reasons why it's so important to get yourself a business credit card so that you can separate your business expenses from your personal ones in order to be able to take advantage of deductions like interest expenses. If you hire a lawyer for any type of business consulting or maybe to look over a contract or even help you license an LLC, then you can deduct that expense in the legal and professional services expense area. If a lawyer gives you a W-9, then you will claim that expense in the contract labor section and not in this section here. Here's a list of the type of legal and professional service expenses that you can deduct in this section. Note that if you hire an accountant, CPA, or tax advisor to help you with your taxes, you can deduct those expenses on your taxes as well. That's pretty cool. Also, a side tip is if you do hire a lawyer or accountant, have them send you the bill with the fees itemized out so that you can better separate those expenses on your taxes. If you keep an office and buy office supplies, those office supplies can be deducted from your taxes. Here's a list of the type of office expenses that you can deduct. Feel free to pause so that you can take a good look at this list. Remember, the types of things that you'd buy for your office that you would keep for a long period of time, like a computer, desk, filing cabinet, or furniture, that's going to be put in the depreciation section and listed as an asset. What we're talking about here are small paper clips, those types of things, and supplies that you would need to replenish regularly. I'm going to skip over pension and profit sharing plans because that's related to an individual who has employees. Here I'm focusing on individuals who work for and by themselves, so there's no need to really go over this line here. If you rented or leased vehicles, machinery, equipment, or office space to run your business, this is where you put those expenses. Repairs and maintenance allow you to deduct the expenses associated with the general upkeep of your office space. The IRS says that you can deduct the cost of incidental repairs and maintenance that do not add to the property's value or appreciably prolong its life. You also cannot deduct the value of your own labor or amounts spent to restore or replace property, as they must be capitalized. So basically, if you need any plumbing work or paint touch-ups or things of that nature in order to continue the upkeep of your office space, that would count in repairs and maintenance. But if you're upgrading your office space or doing a remodel or renovation that's going to increase the value of the property, then that's going to go in as an asset. Line 22 will capture other supplies that you may use for your business that you haven't already included elsewhere. This is going to include things like maybe toilet paper or cleaning supplies for your office space or other materials that you would consume within the year. Believe it or not, you can even deduct some taxes that you pay from your taxes. Here's a list of the types of taxes that you can deduct as business expenses. Notice that there's also license fees that you can deduct as well. If you do decide to incorporate or get an LLC or buy a domain name, those are some types of expenses that you can deduct as well. You may already be familiar with the fact that you can deduct any travel and meal expenses associated with overnight travel for your business. A lot of people in the personal finance space love to talk about this particular deduction. You want to be careful with claiming travel and meal expenses though, because the travel must be associated directly with your business. It can't be as simple as you going to Vegas for a bachelorette party and passing out your business card. That's not going to go over well with the IRS. Make sure that you meet with a tax advisor, accountant, or CPA so that they can go over the details of the type of expenses that you can deduct here. Here is a list of the expenses that you can collect and run by your accountant to see if you can deduct them. Line 25 allows you to deduct utility expenses directly related to your business. If you have an office space, this could be your electric bill, gas bill, water bill, telephone, internet, things of that nature. If you have a home office and let's say you only have one telephone line in the home, then you're not going to be able to deduct the full amount of that bill. You are going to have to calculate the expenses specifically associated with your business. That's why it may be beneficial for you to get a second line or a second cell phone that you use specifically for your business so that you can easily deduct the entire cost of that expense. We're going to skip the wages line because I am focusing on individuals who do not have employees. This would apply to those who are paying wages to employees. The other expenses line can be used for anything else that you spend for your business that you may not have been able to put anywhere else in the lines listed above. Let's say, for example, you purchased an education course that's going to teach you how to design your own website, or that will help you do your own accounting or work Canva templates or something like that. The learning and education that you spend on yourself that's directly related to your business, you can write that off as a business expense. It may be something that would go in this area if you weren't able to find a place for it in any of the lines above. The last expense I'm going to mention here is on line 30, the business use of your home. If you have a space in your home that you use as a home office or even as a storage space for your materials and supplies, you can deduct the use of that space in your home as a home office. You basically need to calculate the amount of square footage that that space takes up, and then you would determine the proportionate amount of utilities, mortgage, and other expenses related to that space as opposed to the overall expenses for your entire home. There is a simplified method that you can use to calculate this deduction, but there are some limitations to it. So once again, you want to seek advice from your accountant, tax advisor, CPA to determine which method is going to be best for you. Okay, if you made it to the end of this video, give yourself a pat on the back and shoot me a thumbs up in the comments. Hopefully you found the information that I provided helpful and informative for you. The whole point of this video was to be able to open your eyes to all the different types of expenses that business owners can use to reduce their taxable income. If you like this video, please hit that like button for the YouTube algorithm so that other people will be able to see this video as well and benefit in the same way that you have. Again, if you haven't already done so, hit the subscribe button and tap the notification bell so that you'll be notified of Money Monday videos as they upload every single week. Thanks so much for joining me today, and I'll see you next Monday.